Hello, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Thank you for watching. So I wasn't around last week, so I'm back in action again. So because last week was a school holiday, so I wasn't around. And in fact, today, I was also actually quite busy. You know, morning I had a meeting. In the afternoon, I actually sent my girl to see a doctor. Anyway, I'll talk more about that later. So before I start, just a quick show of hand. Say hi to me. Is everything okay? Can you hear me loud and clear? If you can, okay, say yes or say a hi to me in the comments. So this live stream is broadcasted to both YouTube and also on Facebook as well. Okay, so you can hear me loud and clear. Please say a hi to me in the chat box, whether you're on Facebook or on YouTube. Okay, Hadley, Alan, Jean, okay. Thank you so much here. All right. So yeah, by the way, tomorrow it is actually also a school holiday. Tomorrow is the start of the PSLE, listening comprehension in a way. I mean, that is an exam now, okay? So for those who have children who is having PSLE this year, okay, so I wish your child all the best, okay? So tomorrow is a school holiday for my girl because she's in P1, okay? All right. Hello, Mei Chok, okay, Richard, Yelam, Hian Ling, thank you so much. All right, so yep. So let me just share my screen. So just now, let me. By the way, just a quick show of hand. How many of here? This is the first time you are watching me. If you are watching me, okay, just type number 1 in the comments because I believe there are new people. Okay, because of the Market Insights conference that's going to be held this coming weekend. There are new subscribers, new registration, and such. So let me just add my screen here. Okay. So, okay, let me just do it here. Nobody, okay, that's weird. Okay, never mind. Hello, Zach J. So let me change this layout. All right, fantastic. So let me just start already. Okay, I'm going to waste your time. Hello, Wailam. Okay, so disclaimer, whatever I share today, it is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence over there. Okay, so for those who are new to MarketWise Asia, I saw this Night's Daddy. Actually, this is my wife. My girl is sending the love to me, okay? Good night, Jenny, okay? Go and sleep. All right, just post a night here. All right, so yeah, so this is my social media channel, okay? So if you head over to the link here, you will see all these various links over there. If you're watching this on a desktop, you can actually scan, okay, using your mobile, okay, Facebook, Telegram, YouTube, TikTok, X, our homepage, okay? And this is the, okay, if you are another website for you, okay, for you to actually scan the social media, okay, or the QR code is over there, okay, to follow, like, especially if you haven't done so for the YouTube and also the Facebook as well. Okay, so before I kickstart once again for this coming week, okay, just to let you know, okay, this coming Saturday will be the Market Insights Conference, okay, in person, live in person, okay, at Suntec Convention Center, 20th September, 10 a.m. to 3 p.m. So there is actually 2 kinds of ticket. One is VIP, one is this general admission. General admission, it is actually free. Okay, so the first 200 attendees will get an exclusive goodie bag from forex.com, our sponsor. Okay, so the first 200 only. So this is the link. You can see it on your scrolling bar as well. I'll post the link in the comments over there. So this is the landing page. Okay, so do register for it. So there's the VIP and general ticket. So general, it is free. Okay. All right, so for the, just to let you know what is the difference. Okay, so for the VIP access, okay, there will be a dedicated registration counter, so you can skip the long queues. Okay, you can just head over to the counter and just walk in after registration. Of course, you can walk in a lot quicker. Okay, and then there's exclusive front row and center seating, and then you have full access, okay, to all the speakers and presenters slides as well. And the good news is, okay, you are guaranteed a goodie bag, okay, from forex.com that's worth $58. Okay, so even if you come a little bit later, you will reserve it for you. Okay, and the rest of course, the general admission, you do have these perks up. Okay, but anyway, it is free also. Do register for it. So just a very quick summary. Okay, this is the goodie bag. Get a Stanley Cup. Okay, so-called mouse pad. There's a big mouse pad that's very large. Okay, it's quite cool. Okay, actually I have it. Okay, and then also the forex.com EasyLink card as well. Okay, and then there's a bonus training video, and then we do have lucky draw on the spot when the event ends. So do stay behind if you're attending this. Okay, and of course the speakers. Okay, we have okay, Roger Montgomery. It is the keynote speaker, founder and chairman from Montgomery Investment Management. And then we have our resident speaker, Jay Tun, founder of Swing Trading. We also have Van V Leong, what we call V. Okay, I call him V. Okay, this is the founder and CIO of Track Record. This is the first time he's speaking at our event. Okay, he'll be talking about day trading. Okay, for the so-called the title of the speakers, I will send out, I think, by Wednesday, so that you have a rough idea what the speakers are talking about. And then we have Sean from forex.com, is the BD, and also the RM from forex.com. Okay, so so that's about it for the promotion wise, in a way that do register for this event. Once again, I will post the link in the comments. If you haven't registered, do register for it. So right now we have close to 1,000 registration already. Okay, so let's kickstart this session right now. So for the economic data for this week, okay, for this week, what is the key event? If you know what is the key event for this week, okay, just shout it out in the comments. Okay, last week was the CPI, PPI. So for this week, the only key thing, it is actually Thursday, okay, Singapore time at 2 a.m. That's Wednesday past midnight, okay. On the US side, it is actually Wednesday, okay. So Singapore time, Thursday 2 a.m. That's Wednesday past midnight. There's this FOMC meeting, okay, and this will be the first time in don't know how many months that the Fed, Jerome Powell, will actually reduce, okay, lower the interest rate over here. So all eyes will be on the Fed over there. I think not much of a surprise if that will go through, but Tuesday, tomorrow, there'll be the retail sales, okay, data, and then other than on Thursday itself, there will be the unemployment claim. So this one will be the market moving so-called event, okay, data releases and such. Okay, so this is that over here. And let me just go through my slides here. I think the slides, it is over here. Okay, so today, I think once again, I should end within an hour. So the things here, okay, last week was the CPI, okay, so well, how come it's like this? Let me try to do, okay. You guys can see my screen. Okay. The late night market talk with Alex. Okay. Just type yes in the comments before I continue here. So I'll go through the general macro update, what has happened, what's coming in, okay, for the next coming 1 week or 2 weeks or so. And then I'll go through the technical point of things, the charts, okay, and my overall view of the market. Okay. So this is it. Okay, so last week was just a very quick recap. Okay, the CPI and the PPI. So the consumer price index and producer price index. Okay, producer is more of the wholesaler kind of pricing for the manufacturer and producer and such. That's why it's called PPI, producer. Okay, anyway, for the August CPI year on year, okay, it is 2.9% year on year, a little bit up, okay, from 2.7%. And in fact, gasoline, okay, drove headline with 1.9% increase, okay, and then the core CPI that is removing the energy and the food, because they tends to be more volatile, so it is staying at about 3.1%. So in fact, the underlying the inflation, it is still quite sticky at about 3%, 2.93% kind of thing. So it has been a while already, still cannot hit the target rate that Fed wanted at 2%. Okay, but the PPI, okay, cooled sharply to 2.6% versus the 3.3% forecast. Okay, the core PPI at 2.8. So inflation, okay, even though it is sticky at about 3%, but it did not really go up a lot. So it kind of steadied for a number of months already. So inflation pressures look contained near term, giving the Fed more scope to pivot. And this is what they are going to do real soon. So later in a very short while, go into that. Okay, so you can see over there just a more of a visualization for the CPI. Okay, versus the blue one is the usual one that is being released, the CPI, and then the gold color, it is the core CPI. You can see that whether it is the CPI or the core, okay, it is generally ticking a little bit higher up. Okay, you can see that the slope, it is going higher up, but it is still about 2.5 to 3%, that kind of, okay, all right, there about lah. All right, and then for the producer, okay, PPI, it is kind of ranging now, okay, but it is still about that 3% mark. Okay, the median is still about the 3% mark. So all in all, inflation is still ranging about that 2 to 3%, not 2%, it's about 3%. Okay, depending on which data that you are looking at. Okay, so now here comes the thing that it is actually worrying, okay, the Fed, or in a way that what the media wants you to worry about. Okay, they have been talking about this labor market that is softening. So you can see that, you know, the based on the data that they are being released, okay, 900K job revision. So it shows a fewer job, okay, than earlier reported. And then the jobless claim, okay, rose to 260K. It is a 4-year high. Okay, all right. So we can see that the labor momentum is actually cooling. So that's what, you know, based on what the data say lah. Okay, and do you really think that the labor market, it is softening? Okay, while you see that the stock market continues to go up all-time high. I think I discussed that about, I think, not last week I wasn't here, I think about 2 weeks ago. How do you guys feel? Do you think that the labor market, it is actually very bad right now? Okay, do you agree with me? If you agree, just type A. If you don't agree, you can just type no also. Okay, so of course in Singapore context wise, okay, we don't see a lot of so-called retrenchment. There is, okay, but not to an extent that we need to be very worried, of course, you know, and such lah. So of course, the graduates, okay, they have a hard time finding the jobs that fit their so-called their certification, okay, their degree and such lah. Okay, it's not uncommon now. Okay, I mean that. Don't talk about that. I mean, nowadays, I feel that the Gen Z, they are quite picky in the jobs that they want to do. Okay, maybe there could be a myriad of reasons, but I think also one of the reasons is that, okay, they can be quite picky. I'm not sure about you. You know, during my era, okay, we have a kind of decent job, that kind of thing. We will just kind of do it, you know, get some experience. So the Gen Z, I'm not saying that they are wrong or anything, just that their mindset has changed. They want more of a so-called of the work-life balance, and of course, you know, like what Pei say, okay, there's also the AI kind of things. Okay, anyway, this is not within my scope. I'm just telling you that based on what the market is saying, there's a labor market that is softening. Like, you know, heard the SG market is softening right now. Okay, of course, AI and such. Okay, but anyway, okay, on the US data, okay, the unemployment rate, okay, it is still hovering about 4% plus, okay, less than 4.5%. So that is good. Okay, anything that's above 5%, then I will be a little bit worrying, because, you know, based on historical past record, anything above 5, okay, that could signal that a recession could be coming in due time. But just to let you know, I think I repeated quite a number of times, okay, the economy, the labor market, okay, is not the stock market. So please don't link these two together. Some of you guys who might be new, okay, to the financial market might be thinking, hey, how come, like, you know, the labor market, the economy is not doing so well, but the stock market keeps climbing higher? What's the reason? Okay, So, okay, if the stock market starts to fall or go into a downtrend, then I will be very worried, okay, because, okay, typically the stock market, okay, will lead the economy. So I repeat, okay, typically, okay, the stock market will lead the economy, okay. So typically you go down first before the market, the media will tells you that, you know, we are officially in a recession. Okay, everything clear? If okay, just type okay in the comments. Okay, so like I mentioned, right, the Fed, it is poised to resume cuts. Okay, so despite inflation above the target, right, the Fed is expected to cut 1 to 2 times. But the problem is, okay, right now, okay, the Fed fund rate is anticipating the Fed will cut 3 times, okay, until the end of the year. Okay, so September, October, December, okay, based on the Fed fund rates, they're anticipating that they will cut 3 times, okay, until end of the year. By right, it's supposed to cut 2 times, but the market, okay, is always forward thinking. They're anticipating that it is going to cut 3 times. Can you just type 3 times? Type 3 in the comments, okay? So the Fed rates, okay, seems drifting to about 3 to 3.5% over time. Like I mentioned, right, the market pricing, okay, expecting a faster easing path, okay, below 3% by the end of 2026. Okay, so all in all, the policy bias is shifting towards the more of the dovish sides. Okay, they'll ease. Okay, they'll cut rates. Okay, which is aiming to cushion jobs. Okay, and of course, you know, right recently the bonds yield has been slipping because the bond price has been going higher. So bond price and the yield has a inverse relationship. Okay, bond price going higher, yield will come down. So this is anticipating. So the 10 years treasury performance, okay, briefly touched 4%. Okay, matching April's low. So expecting the 10-year to remain 4 to 4.5% range over that. Okay, so you can see that, okay, the market, it is actually pricing faster, okay, than the Fed dot plot. This is actually what the Fed, it is projecting, okay, regarding their targeted interest rate over there. But the Fed fund rate is actually projecting a much faster. So they're anticipating that maybe the market is not doing so well, and the Fed will actually have to keep reducing the interest rate over there. Okay, so you can see over there, over here, right? This is the target, not this one. Target rate from the Fed Watch tool over here. You can see that the next FOMC meeting is just 2 days later. That's actually Wednesday, okay, Singapore time, Thursday midnight. You can see that, you know, right now it's in the 17th of July meeting date, okay. You can see that, okay, 96% chance is close to 100. So there's the Fed, I mentioned, doesn't want to give surprise to the market one. They always prep the traders and investors, okay, the public, the market ahead. In fact, it is quite firm during the so-called the Jackson Hole Symposium. They really kind of prepping the market that they will cut the interest rate. So you can see that right now, the interest rate, it is between 425 to 450. So there's a 96% chance or close to 100 that this coming Wednesday, they will cut 0.25% to 4% to 4.25%. Okay, so this is nothing unusual. Okay, the interesting thing is that you can see from here the October one. Okay, October one. All right, so you can see after that, if they cut already, should be 4%, right? Okay, 4 to 4.25%. So let's go to the base rate. Okay, the 4% mark. Okay, so if they cut this coming Wednesday, okay, so after that it should be 4%, right? 4% already, then in October, okay, 29th of October, okay, you can see that, okay, after that it should be 4% already. Then there's a 78.9% chance, that's about 80% chance, okay, that the Fed, okay, will cut another 0.25% to 3.75%. Correct or not? Okay, so if October they cut another 0.25%, that will be 3.7% already. Clear or not by then? Okay, correct, 3.7%. So by then, if in October it's 3.7%, and then if coming to December, okay, coming to December, okay. All right, 3.7%. There's again about 75% chance that you cut another 0.25% to 3.5%. Okay, so which means that okay, there's a good chance that right now, okay, there's a good chance that if you cut from 4.25%, okay, right now to 4.25%, and to December, the interest rate reduced to 3.5%. 3.5%. That is what the market is predicting right now. So can you just type 3.5% in the chat, okay? So that you know that everything is good, you know what I'm trying to say, etc. Okay. Someone come put the chat. Can see 3.5% in the chat. All right. Thank you, Haley, for your participation. Okay, Turbots, thank you. Okay, 3.5%. Are you guys aware of this or not? Okay. Previously, it was projected to cut 2 times only, but this time it is cutting 3 times. Okay, within until the end of the year. Okay. All right. So do I still have more things over there? Yeah, this is the end of the so-called my slide, but there are still certain things that I want to share with you. So more of from the data point of view over here, it is actually this. Okay, this is this. So you guys can see, right? So you know, I think it has been 9 months since the last cut. Okay. All right, date of the next cut is actually months between cut. Okay, I think you guys can see, right? Okay, so the key thing is, okay, the summary of this thing is that, okay, long waits between cuts can be quite bullish. So you know the S&P return typically, okay, if the Fed wait about 5 to 12 months, okay, after that then they cut the interest rate. Okay, forward looking, the next month, the next 3 months, the next 6 months, the next year, okay, the market tends to be bullish. So we can see over there, okay, the next cut, it is actually 17th of September, okay. There's 9 months between the previous cut, okay, and then how is the forward projection? You can see that previously, okay, between 5 to 12 months, okay, maybe within the next month, within the next 3 months, within the next 6 months, okay, it can be quite choppy, but I can see that within the 1 year, okay, forward looking 1 year ahead, right, okay, 90% chance, okay, based on this data that we have from 1970, okay, based on this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 instances, okay, 10 instances, the market went higher 1 year later. So this is quite bullish, okay, so this is based from the Carson research over here, okay. All right, and then another one that I want to share, this one is actually not so much on the market, but just to share with you another one from the Carson research over there. So this is regarding the gold data over there. So this is gold. So of course, you know, gold finally topped, okay, so adjusted for inflation, okay, of course, you know, in 1980s until now, inflation keep going higher every single year, correct now. But I know the gold price stays stagnant and such. But this is the first time this year they actually top, okay, the 1980s peak adjusted for inflation. So in a way that if you are talking about gold in real price adjusted for inflation, okay, gold has reached its all-time high this year, okay, according to real price adjusted for inflation. Okay, all right. So I know some people are asking me, hey, you know, is the market a little bit frothy? You know, is it going too high and such? Okay, can the market continue to go higher and such? Okay, for this year, okay, my personal view is that okay, I think no issue. Okay, no issue. Based on options flow, the market is still supporting well. Okay, so this year should be no issue. For next year, okay, we take one step at a time. But I just again want to ask you a question over here. Okay, I think I asked that 2 weeks ago. Okay, maybe you didn't watch that or what. Ask you, do you think the market feels very toppish right now based on the sentiment that you are seeing on social media, comparing the sentiment on in 2020, 2021. Okay, I repeat, I don't know whether you guys still can remember 2 weeks ago when I think it's 2 weeks ago when I mentioned, okay, 2020, 2021, okay, the sentiment was actually very bullish, okay. People was very FOMO. Can you still recall the FOMO or not? In 2021, people talk about, oh, all the growth stocks and such, okay, like if you don't invest in the stock market, okay, you'll lose out, okay, you'll lose out to inflation and everything. Can you remember or not? Okay, can you remember the 2020, 21 or not? If you can, okay, just type 21 in the chat over there. Okay, 21 in the chat over there. Okay, so just based on the subjective sentiment feel, okay, I don't see that the media, it is talking a lot about the stock market, even though it is at an all-time high. Okay, once in a while talk lah, but the sentiment isn't very euphoric yet. Not yet. Bullish, but not yet. Okay, not like the 2020, 2021 peak. Okay, yeah, so not much are talking about that. Okay, and you can see that in recent days or weeks, okay, they are starting to see more IPO coming in. Okay, IPO, when the market it is very bullish, you tend to see people want to list their company. So for example, the most recent one, okay, I think it's actually Gemini. Gemini, it is actually the crypto, okay, because the Gemini space station, Gemini crypto exchange. You can see that just listed, okay. So all these are starting to come in. There are a lot more IPO, okay. I think one of the most prominent ones is this one, okay. I think there are still a few of them, but starting to get more. But it is still not at, I feel that it's not at the peak yet, okay. When it start to come, okay, you know, okay, media start to announce more and such now, okay. So I think that the markets might still have some room to go higher, but again, it doesn't mean that the market will keep chong, okay, in Hokkien chong. There always some pullback along the way and such, okay. All right, and okay, so this is overall longer term market view, market outlook over there, okay. I think next year, maybe first quarter of the year still can continue to go higher, that kind of thing. But after that, okay, second quarter onwards, I'm not God lah, so we have to see one step at a time. Okay, and also based on the chart right now, this S&P, you can see that today it is still pretty bullish. Okay, of course, for the SVI members, you guys know what is this week, okay. For maybe non-SVI, do you know what this week is or not? Okay, until this coming Friday, what is this week? Can anybody tell me the answer? What is going to happen this week, this coming week? Anybody can tell me the answer? Okay, very quiet. Right now we have 120 people in the room. Okay, I don't want to waste your time. Okay, so it is actually the OPEX, right? This coming week it is actually the OPEX. So it is actually triple reaching. Okay, so if you go to this calendar, options calendar, I think I shared quite a number of times before. Okay, I'll post it in the link again. So this is OPEX. This coming Friday is the third Friday of the month. Third Friday of the month over here. Okay, you can see here, maybe I zoom in a little bit bigger. Okay, I think enough. Okay, 19th of September, third Friday of the month, triple witching. Okay, the third quarter. So all the options expiration, the stock expiration, the futures, and everything. Okay, it expire this coming Friday. Okay, the next one will be October 17th, the typical every monthly, the monthly option expiration 17. So this week is 19. So typically, I think for those who have been with me for some time, okay, typically if the market it is uptrending, heading towards the options expiration week, okay, the market tends to be bullish. Okay, Friday itself not so much, but typically the week itself it is bullish. So I actually prep my SVI members that actually this coming week, okay, continue to stay bullish. Okay, continue to stay bullish maybe until Thursday. Okay, Friday, it depends lah. Okay, All right, so like today, it is quite bullish. So I know since the start of August, there are people calling for the market, it is going to come down. Okay, because ever since ever since April, of course, there's this potential star reversal, and which I actually called for a potential bottom. Potential at the time, I didn't know it was the bottom. Okay, all right, so yeah, so in hindsight, it was the bottom. Okay, so price just continue to go higher all the way. So of course, people say that based on seasonal thing, okay, August tends to be weaker, September tends to be weaker, and such. But this year, it kind of defies the historical track record for September. Of course, right now we are still in the midst, just in the middle month of September lah. So, but it has already gone higher already. So you can see that the central pivot range is supporting very well. You can see that supported well over here. This is above, supported well, CPR supported well at the central pivot range as well. Okay, and the zero gamma level, which is if you go to spot gamma level, it is actually here. Okay, so this is where there is this gamma flip from negative to positive gamma. Okay, basically this is the area where it's zero. Okay, positive to negative to positive. So like I mentioned, nowadays they change their numbering. It's not that easy to read, but the number is about 6575 there about. So if price can stay above 6575, then the market you tend to be supported. If price break below 6575, then there could be more downside to go. Okay, there could be more downside to go. But again, okay, this is based on the current pricing right now. So once again, okay, August, September has been quite a bullish month. So based on the options flow, okay, based on what I understand from all the data, okay, this week will be well supported. Okay, well supported doesn't mean that it won't like stagnant or anything now, but at least market, I think okay, I could be wrong. Okay, please don't quote me, I could be wrong. I don't think the market will crash this week. Okay, I don't think the market will crash this week. Crashing as a sharp pullback. Okay, I need to use the word crash very carefully. Okay, not crash. Okay, I don't think there will be a steep pullback this week. Okay, I don't think there will be a steep pullback this week. Okay, I don't think so. I don't think so for this week. Next week onwards might be. Okay, so if we actually take a look at what I actually shared with my SVI members over here. Okay, SVI members over here, options flow. I won't go through every single thing over there. So for example, the S&P. Okay, so I tell them that where is the net premium. Okay, where is the net delta is still positive. Okay, OPEX show put support. Okay, stabilizing near term. Okay, but the October 17 OPEX carry bearish hedges. Okay, for the QQQ based on the past 2 weeks options flow. Okay, it is bullish. Okay, until the so-called the September near term. September 19 is bias. It is higher, but October 17 is still higher, but there's some call overwriting. Okay, they sell call. Okay, but something that's more of concern, it is the mid cap, smaller cap, like the IWM over there. You can see that it is more of a bearish positioning. So once again, until the 19th September, okay, it is well supported. Okay, well supported. But heading into the October 17, okay, October 1, it is more of the bearish premium and delta. So which means that, okay, heading into September, okay, this is where I want to make my forecast in a way. Okay, I could be wrong. Once again, can you please repeat after me? Alex could be wrong. This is not financial advice. Okay, please to say Alex say the market will come down. No, I'm just saying that based on what I'm looking at. Okay, there could be a potential chance that the market, okay, could be coming down, okay, in October. Maybe of course I can't pinpoint the exact date, okay. Maybe after the OPEX, okay, this week, okay, from here to here, okay, the market might come down. So instead of the market coming down in July, coming down in August, okay, and in September, I think the market we might see some steeper pullback, okay, in October. Okay, Can you just type 10 in the chat to show that you understand what I'm trying to say in October? Okay? So I'm anticipating the market will finally have a pullback in October when people are expecting pullback in October. Expecting a so-called a rally in October. Okay, so I won't be expecting a rally in October. Okay, so this is my view. All right. So for the oil wise, I have actually shared with my members lah. So I cannot share everything now. So certain things I have to leave it to my members, so they already know what happens. Okay, for the asset classes in different asset classes. Okay, so I won't be talking about oil today. I won't be talking about oil today. Okay, so Melvin, no, okay, oil is good. Okay, I don't know how good is good. Okay, that is subjective lah. Okay. So this is my view on the S&P 500. So this is my personal view. And looking at the DP gallery here, okay, the usual one that I am looking at here, okay, also something of concern, okay, I'm not sure whether you guys have picked up. So you can see that while the market continues to go higher, okay, this is the market breadth percentage of stocks above their 20, 50-day and 200-day EMA over there. So while the market continue to go higher, okay, there is actually a bearish divergence over there, okay, based on the 20-day EMA. So the percentage of stocks above the 20-day EMA. So it is kind of coming down. For the 50-day EMA, it is not so obvious, but it is also coming down also. So, but the market breadth, it is not a timing tool. So you cannot time when the market will drop, but it tells you that, you need to be a little bit careful. Okay, you need to be a little bit careful. Okay, but you can't type exactly when the market will drop. Okay, and if you actually take a look at the sentiment chart over here, it's quite interesting. Okay, quite interesting. Okay, while the market continue to go higher, all-time high. Okay, the AAII investor sentiment. Okay, which is a kind of a US investor group now. Okay, ask the retail investor how is their feel about the market. Do you think it's bullish, bearish, kind of thing? Okay, about 50% are actually bearish. 50% are outright bearish. Okay, 49.5%. Typically, when it is above 40%, I consider it very so-called bearish already. Okay, typically you can see that when it is in a short pullback phase, okay, at about 40% mark, over there, okay, the market tends to have pullback, then will go higher up again. Okay, go higher up again, that kind of thing. 50%, it tends to mark a bottom if the market really does come down. Of course, this is an extreme case. Okay, about 60% mark. You know that the market, it is like very bearish already. But this is quite strange to me. Okay, while the market is all-time high, okay, the sentiment, it is very bearish. So it tells me that okay, a lot of people are still not participating in this bullish market yet. So this again leads me to tell me that okay, the market can continue to go higher. Okay, maybe not every single day go higher lah, but overall until the end of the year, the market still can go higher. Okay, because many investor traders are still bearish, and of course a lot of traders are already expecting that the market is going to drop, the market is going to drop, but it didn't drop. Okay, and I think that for this coming week, okay, it is continue to squeeze them higher until into OPEX, at least into the OPEX. The market continue to go higher. Okay, so yeah, so this is something to share with you. So something interesting over there. So this is from DP gallery. Okay, learning something new so far. Everything clear? If everything clear, everything good, okay, just type good in the comments over there. Okay, so right now we have more people coming in. So just to let you know once again there, okay, for those who just joined me, okay, who are new or who haven't watching my Facebook Live for a while, okay, there we have this Market Insights Conference, live in person physical event this coming Saturday, 20th September, 10 a.m. to 3 p.m. at Suntec Convention Center. Okay, so the first 200 attendees will get the exclusive goodie bag. So this is the last lap of 2025. There will be market outlook from our various speakers. So this will be the link for you to register. Post the link in the comments. Okay, I can see in the scrolling bar as well. Okay, so this is the landing page. Where is it? here. Okay, so this is the one over there. We have the VIP and also the general ticket. General ticket, it is actually free. Okay, so you can just click register. So just to let you know, in case you're not aware, the VIP pass have some perks. Okay, dedicated VIP counter, so you can skip the long queues, front row and center seating, full access to the stickers, slides, and you are guaranteed, okay, a goodie bag that's worth $58. Okay, of course, the general seating, it is free. Okay, you don't have such perks. Okay, all right. So the goodie bag, okay, a tote bag, Stanley card, EasyLink card, okay, and also the gaming mouse pad. There's a big mouse pad with the candlestick chart patterns and the chart patterns. Very interesting. Okay, and then we have lucky draw as well. Of course, you know, the speakers will share with you the market outlook for the last lap of 2022. We have Roger Montgomery, founder and chairman from Montgomery Investment Management. We have Jay Tun, founder of Swing Trading. Okay, Sean Sim, BD and relationship manager from Forex.com. We have B, okay, founder and CIO from Track Record. So, you know, they'll be also doing a panel discussion, okay, on the day itself. So it'll be quite interesting, okay. All right, so yeah, do register for this event. Once again, I'll post the link in the comments. So there'll be popcorns, okay, and so there'll be photo booth, okay. Do go there and also have some fun, okay, and also get the market outlook, okay, for the rest of the year as well, okay. All right, so at this point in time, okay, just to take a pause first. All right, so if you find so far entertainment, value, knowledge in this live stream, can you just give me a like, okay, share or comments, okay. I think liking is the easiest. Right now, there's only 10 likes, okay. I don't know how many are on Facebook. I think this is only based on Facebook, okay. Can you give me at least until 20 likes or not? Just 10 more, very easy one, can or not, okay. Just 10 more likes. Okay, one is 10, okay. Just give me 10 more likes before I continue, okay. If you want me to share the trade idea for this week, okay, at least until 25 likes, okay, can or not? Very simple lah. All right, so if don't have, then I don't share lah. Simple as that. Okay, so any questions so far? Okay, all right, so just now I think purely asking about oil. I think actually I also forgot about not so bearish, okay, not to be so bearish about oil if I'm not mistaken. Okay, all right, so yeah, any question so far? Okay, just want to share with you also certain things, okay. So you can see over there, I think previously I talked about, okay, for those who have already know about seasonal advantage insiders, right? Where is it? The chat over there, okay, general. Okay, so previously I talked about, where is it? Tesla, okay, Tesla. Hey, where is it? Huh? Search again. Okay, never mind. TSLA. Not here in this group. Is it this one? This one? How come I can't find? Or did it get deleted? Never mind. Okay, anyway, I shared about is it under the bot? I forgot already. Yeah, never mind. Okay, I shared this. Okay. Okay. I think I know where already. Okay, I think I missed out this. No, not this. Sometimes I forget why I shared. This one, sorry, it's just there only. It is just there only. Okay, sorry about that. Okay, so I first shared on September 3rd, okay. Tesla, okay, I don't mind sharing with you, okay, until 22nd. It's almost there already, okay. All right, 2025, 5th of September to September 5th to 22nd, 100% track record, okay, bullish, okay. So this is based on the data sheet there. I provided them in the SVI. So you can see that I posted this on September 3rd. September 3rd. Actually, it's September 2nd because this is actually past midnight. Okay, past midnight. So actually September 2nd, Singapore time. So if you take a look at Tesla, okay, all right, over there. All right, September 2nd over here. Okay, I do a naked chart, easier to see. Okay, I remove all the lines here. Okay, September 2nd, it is here. Okay, I first mentioned it is here. Okay, at this point in time, you know, Tesla was not well loved. Okay, if I remember correctly, it is not well loved. Okay, there's only 19 likes. Not enough likes. Okay, all right, so can continue to give me likes. So if there's no 25, then I won't share the trade ideas. Okay, yeah, all right. So this one, it was not well loved. So just hovering now. People are talking about Tesla, about not Tesla, talking about Elon Musk, you know, what they're not doing his job, you know, it's just another car company. And so a lot of some negative news are about Tesla, okay? But, okay, based on the seasonal pattern, not seasonal pattern, seasonal data, okay? And if you take a look at the central pivot range, it was well supported at the CPR, okay? Plus the data, like it was within the very favorable bullish period, 100% track record for the past 10 years. Okay, this is what happened. Okay, I was inside, okay, exited, and in fact, some members surpassed me, still holding on to it. Some, I think, a lot exited already. So you can see that it is up how many percent? Okay, 26%, but of course you won't get exactly 26% now. Okay, so you can see over there from this is the SVI recently only lah. Okay, the member success over there, quite a number of them. Okay, on Tesla, buy into Tesla lah. Okay, of course not every single trade it is like this lah. Okay, I'm just cherry picking. I'll be honest with you. Okay, this is a very good example, classic textbook example. Okay, within the favorable period with price action trigger at the CPR level. Okay, this is what we want to achieve in SVI. Okay, as long as your reward to risk ratio it is more than 1. Typically, I go for more than at about 1.5. Okay, which means that okay, if I can get a reward to risk ratio at 1.5 R, which means that every time I risk $100, okay, I profit $150. So every trade I risk 100块。我拿回150块 okay, if you can do that consistently, okay, you can lose 50% of the time, you are still profitable, which means that, okay, out of 20 trades, okay, you can lose 10 trades. 10 trades are losing trades. At the end of the day, you are still profitable. This is what we are trying to achieve. Okay, so as I say, okay, this is one of the very good example over there. And previously, okay, I have to keep repeating also, okay, because this is, I think that it is really good lah, okay, in a way that plus the options flow over here. You can see over here, okay, previously I talked about McDonald, even though the market it is going to continue to go higher, but you can see that the McDonald on the 2nd of September, okay, I talk about options flow again, negative, okay, premium and the delta, it is negative. So net intention, it is actually bearish, okay. So MCD, okay, this is what happened. 2nd of September, it is over here. Okay, so again, you know, we wait for the, at least I wait for the right trigger, okay, and then you see the price just go down like this. Okay, another one that I mentioned, it is what is it? Nike. Okay, Nike. Nike over there. Also at September. Okay, you know, net intention, strong bearish over there. Okay, overall, okay, it is not within the seasonal data sheet, but I told my members that actually you can take a look at based on the options flow. Okay, options flow is telling what the smart money it is actually doing. Okay, you can see that Nike over here. Okay, yep. Second, it is actually over here. Second, it is actually over here. See, second over there. Okay, just so if you're actually doing swing trading, okay, you will have profits one. All right, and I think the most recent one, I think that I won't talk about the most recent one. I mean that another one, okay, a little bit more tricky, but there are still members who got it. Okay, RG TI. So this is actually Rigetti Computing. I first mentioned in August 14. Okay, so this is bullish. Okay, but I got stopped out. Okay, I got stopped out, but there are members who went in. Okay, so you can see that RGTI, and recently, okay, quantum computing. Okay, quantum computing is in the play. Okay, you can see that RGTI over here. Okay, yeah, I entered a little bit too early, so my stop loss was a bit tight. Okay, it flushed down, but eventually, you know, it went higher. Also, it went higher. Okay, so if you are doing swing trade, you also get a decent profit. Okay, not so decent, pretty good profit, definitely more than 1.5R. Okay, all right. So this is how I combine, okay, seasonal data, okay, with the options flow as well. Okay, all right. So you can see over there, for example, you can use the alpha bot, okay, and search, for example, Tesla. What is the seasonal date for Tesla, for example? Okay, now with the bot, okay, I can even come out with the data a lot faster. So at one glance, this is exactly the same as what is presented in the data sheet, okay, in various format that the members can take a look and such. Okay. All right. Any questions so far? 24 likes. Okay, one more likes before I go into the trade ideas. Before I go. All right. So previously, okay, the things that I'm talking about, it is still in play. Okay. So previously I talked about the dollar index. So dollar index, okay, in late August, okay, it was kind of flat. Okay, it continued to go down lower. So if we take a look at DXY, DXY, DXY. DXY over, where is it, DXY? Okay, so when I first mentioned late August, it is here, but price didn't really move much, okay? So it just grind down a little bit lower, grinding down, but it's still in a kind of a ranging movement. So this time around, okay, it is still within, okay, within the so-called the favorable period. So this is a continuation of the dollar index over there. So for the dollar index, okay, from the 18th of September until the, where is it? 18th of September to 3rd of October. So you can see the window, it is tighter, okay, for the past 14 years, okay, 93% of the time, okay, it went higher. So which means that of the past 14 years, 13 years, it went higher. So once again, this is dollar index. So if you are dollar index, the proxy will be Euro USD to short. Okay. So because dollar, you can see that this is Euro versus dollar. So if the dollar index, it is going higher, then obviously the Euro is going to go down. So because we are always in pairs, okay, for the Forex. And Euro, okay, based on the dollar index, Euro constitute about 60% of the basket in dollar index. Okay, so, you know, again, I'm not asking you to short or to sell short. Okay, this is based on what the data is telling me. You decide on yourself. Okay, this is just education data. Yeah, this education data. This is just data. Okay, all right, it's what happened in the past. So, you know, I'm just sharing with you over there. Okay, I see that. Oh, okay, there are 26 like fantastic. So another one that I'm looking at. Okay, I'm going to share today. Okay, also more of the okay, on the commodities. You can see that this wheat, okay, didn't really work out that well yet. Okay, so you can see that this is a wheat when I first mentioned, I think 2 weeks ago. So you can see that wheat did not move up. That when they first mentioned it, okay, it's 8 September over there. So you can see for the commodities, okay, yeah. So it's somewhere around, I think it's, yeah. So it just go down low. So you might get stop out, okay? You might get, but personally, I didn't enter this, okay? I did not enter this, but this is wheat, okay? But again, we do have another commodity very similar to wheat that is coming up, okay? That is actually corn. Okay, it's corn. All right, corn. Okay, just to share with you, corn. Corn, it is actually ZC. Okay, this is actually bullish, favorable period over there. from 18th of September to 3rd of October. No, this is sorry, 17th of September to 1st of October. Yeah, also a pretty short window period, okay, for the past 10 years, okay. 90% of the time, it went higher. Okay, so again, this is just data. So again, you cannot expect every single trade to get it right. Like I mentioned, okay, as long as your reward to risk ratio it is favorable, okay, then it is good. Okay, somehow you can be very unlucky every time. Somehow okay, you entered into the last trade and the rest of the trade didn't enter. Then you say that it doesn't work and such. So you have to be consistent in executing your trade when you see the opportunities, and you can't just rely on just one single data point to went all in and just trade now. So any single trade, I repeat, any single trade should not kill you. Okay, it should not kill you. It is just another trade for you. In case you're wondering, some trade I didn't get it right, it is perfectly fine. That kind of thing. I mean that for those who really trade, okay, you cannot win every single trade one. Okay, again, this is just data point. You decide yourself. So this is corn. So corn, it is this. Okay. So price action wise looks not too bad. You can see that this is actually going down, resisted by the CPR, resisted by the CPR, resisted by the CPR. Now get above the CPR, found support at the CPR level. Okay. All right. So again, this is just data. How you want to enter, if you really want to enter, it is entirely up to you. So this is none of my business for now. Okay, I'm just providing you the data over here. Okay, so yeah, so corn, I don't think in fact all of you here will trade the corn futures. I don't think so. So as a proxy, okay, you guys can trade the CFD, okay, which forex.com actually they have CFD on corn. Okay, or you can trade the ETF corn. Okay, the ticker symbol is just really corn. Okay, it is just corn. So if you take a look, go to corn over there. Okay, under the Tulcrum corn fund, this is the ETF. You can see that generally it follows the price action of the corn futures over here. Okay, all right. So previously, I also mentioned about copper, okay, to my SVI members in the group chat over here. Okay, so previously, I don't mind sharing with you under the group chat here under the general. Okay, so we have copper. Okay, copper. All right, bullish. I first mentioned in September the 1st. Okay, September the 1st. It is here. Somewhere around here. Okay. Yeah, there's a pullback to CPR. Okay. This one I'm inside. This one I'm inside. Okay. So this is quite decent profit right now. Okay. Above 1R profit. So these are the few things that benefits from the SVI member. So if you have known SVI for quite a while but have not subscribed, okay, or maybe you are past subscriber. So if there are new things. Okay, I talk about options flow, and right now the board it is there as well. So you can feel free to drop me a email, or whatever it is. You can via Facebook or whatever it is. You know how to get in touch with me. Okay, yeah, you can inquire for now. Okay, any questions so far? Any questions so far? Okay, so before I continue, just once again to let you know that the Market Insights Conference, okay, this coming Saturday, all right, do register and I'll see you in person as well, plus the 4 others expert speakers there. Okay, so this is the link that I want to share. You do register via the link in the chat, okay, or this link over there, bit.ly, bit.ly/MICSEP25. Okay, Market Insight Conference September 25 over there. So this is the landing page over here. Okay, so just head over there. Okay, just click on the register button. Whether it's VIP or general admission, it is fine. Okay, yeah, I think for most people it is general admission, but we have quite a number of VIP access pass as well. Okay, all right, we have bought it. Any other question so far? Any other question so far. So of course, there are certain stocks that I'm looking at. Okay, there are certain stocks that I'm looking at, which I already mentioned to the SEI members. Okay, but overall, okay, until this coming Friday, my view is that stay bullish. Okay, stay bullish. Okay, all right. The market might chop or go a little bit higher, but I don't think the market will have a very steep. I can't write. Yeah, never mind. Okay, so I don't think the market will have very steep correction. Okay, but heading into October, I will be heading to October, I will be a little bit more careful, which I think that there will be a correction in October, which people might not be expecting it. Then the correction will come. Okay, of course, I have to look into the options flow again to kind of to confirm my analysis and such. Okay, there's no such thing 100%, but at least give me a lot more data points to work with and such. Okay, all right. So I think with that, I've come to the end of the session. So most likely, next Monday there will not be any Facebook Live because after the event, typically I don't do the Facebook Live. Okay, take a break. Okay, all right. So I think maybe I see you guys 2 weeks later. And before I go, if you find value in today's live stream, okay, whether you're on Facebook, on YouTube, if you're watching on this on YouTube, okay, subscribe our YouTube channel, okay, and follow us. Type letter V in the comments if you find value in today's sharing session. Okay, I'll just type value. I really appreciate that. Okay, so once again, thank you so much. Okay, let Facebook and YouTube know that you want to see more of our content in the future. Okay, you comment, like, okay, comment, like, follow, you hint to them now. So with that, once again, thank you so much, and I will see you guys 2 weeks later. Okay, good night, 晚安, and bye bye.